to go back to the self-driving upgrades that are potential and that potential margin opportunity. I mean, the company is under investigation related to its self-driving.
We think it's a phenomenal product. And, 10, 20 years from now, 5 years from now, I think people will be thinking back about the days when people actually drove their own cars as an unsafe period of time, because the safety rates ultimately of this technology over the long term are much higher than human driving.
They're under a fair amount of pressure from the standpoint of, look, they've got 4 gigafactories worldwide. They've got 2 here in the U.S., 1 in China. The biggest is in China. And then they've got 1 in Europe. So you've got these factories that are in place with a manufacturing capacity of somewhere around 2 to 2.2 million vehicles. So you don't want to, if you have that capacity and you can use that capacity, you want to use it. And if you're Tesla right now, you have the hammer, Tyler. You have the best-selling electric vehicle in the world with the Model Y, and it's in a sweet spot in terms of pricing relative to other vehicles. So if you are Tesla and you can afford to take a bit of a hit on your automotive gross margins, which were, 26.8% last quarter? All right, so you drop them down to 22 or 21%. You know what? That's still more than double than the profit margins from all the established automakers.
Almost 2 weeks ago I asked, but didn't answer the question, is this the bottom for Tesla stock? I did suggest that I wouldn't be surprised to see it bounce rather violently, and so far we seem to be seeing exactly that. Tesla stock surging higher once again today, up close to 8%. If you're a regular viewer of the channel, you'll have heard me repeat over and over and over and over again that I don't think Tesla's valuation makes sense, and at some point I think the stock market will finally figure that out. Now, I'm not calling it yet. We may not be there yet, but on the back of today's surge of almost 8%, Tesla stock is fast approaching a $500 billion market cap once again, and since asking the question, is this the bottom for Tesla stock? The stock has surged 21%. Still, however, from peak closing price to where we are today, still down almost 65%. Doesn't make sense, won't age well, and won't last. But as we know, short-term predictions are fraught with danger, so I'm not going to make any. But I am, once again on the record, saying that Tesla stock today, in early 2023, with a market cap less than $500 billion, to me makes 0 cents. Hence, I'm still buying with literally every spare cent. And as a reminder, it was just a couple of days ago that I covered the individual investor net purchases of Tesla stock over the last couple of years and pointed out that as Tesla stock continued to plunge lower and lower and lower, and I do mean plunge, retail investors, you and I, absolutely loaded the fuck up. We can see here in blue, these are net purchases of Tesla stock by retail investors over the last couple of years. And as Tesla stock began its collapse, retail investors began absolutely buying the fuck out of the dip. And who were retail investors buying Tesla stock from? The big brain institutional investors who at the exact same time that you and I were buying, they were dumping. I mean, seriously, this is almost a perfect correlation. The lower Tesla stock went, the more retail investors were buying. And my prediction, as I've said recently, is after Tesla stock surges maybe a little bit more, and I don't know when it's going to surge, I'm just saying it will at some point, after these big institutional investors have missed out on another 10, 15, 20+%. Remember, Tesla's already up 20+% since just 2 weeks ago. I think that it went up again. Should we buy it now that it's gone up way more? The same big institutional dipshits that sold Tesla stock at 2-year lows, I believe, are the same clowns who'll be buying it hand over fist. The exact same stock they sold at record lows, they'll be rebuying at significantly higher prices sometime this year. So round of applause to the big brain institutional investors on Wall Street. Well done. I wish I was that smart. By the way, if you'd like to know how much income I earned last year in the full year 2022 from YouTube, Patreon, and all other sources, head over to Patreon now. I'm just about to post my full 2022 income reveal video detailing every dollar I earned for the full calendar year 2022 from all income sources. This one's going to be a Patreon exclusive. I know a lot of people who watch the YouTube channel don't give a fuck about my income, but for those who do, the financial voyeurs, the folks who'd like to use this as inspiration, or to masturbate furiously about how much they hate me and how lucky I am and how I don't do any work, etc., head over to Patreon, check that one out.
Tesla is charging up for its earnings release Wednesday after the bell, after production delays and Elon Musk controversies hit the stock hard last year. But analysts are still bullish, with 64% keeping the EV maker at a buy or overweight rating, according to FactSet. Canaccord Genuity Managing Director George Giannarakis joins us now for what to expect. George, buy or sell Tesla into earnings?
Buy.
Why is that?
It's pretty simple. Look, obviously, as you alluded to, the stock had a pretty bad 2022 in terms of its performance. That was based on multiple things, and some would attribute it to Elon Musk's rantings on Twitter. We think it had a lot to do with the demand situation impacting Tesla first starting in China and later kind of leaking into other parts of the world, including the United States. People know that. It seems to be priced. A lot of that seems to be priced into the stock. Now, the big question mark going into earnings is how much will recent price reductions impact gross margins? And we've taken a positive view on it. Look, it's almost without a doubt that next year we'll see a reduction in gross margins, but we think the company's doing two things. First, they're seeding the market with their vehicles that are forward upgradable with full self-driving software, meaning that if the average car makes about a 30%-ish or $15,000 of gross margin, guess what? Every time someone clicks a button and decides to become a user of full self-driving software, that's an additional $15,000 of gross margins or another 30%.
4 words. This guy gets it. This is super fucking important, something that I've stressed repeatedly. Tesla cares more about expanding their fleet, their total install base, than anything else. They want vehicles on roads. Not only does this align with their mission, the more vehicles they have on roads, the more data collection centers they have on roads, which accelerates the training flywheel of the full self-driving software. And in the future, as we heard, any user, any Tesla owner at any point in the time has the option of upgrading to full self-driving. And immediately, $15,000 drops straight to Tesla's bottom line, almost pure profit. There is effectively zero marginal cost for a user to purchase FSD and Tesla to enable it on their vehicle. It's just a bit of code. Now, don't get me wrong, Tesla does actually have a team developing this software, but there's no additional cost to Tesla when a new user decides to drop $15,000. So a vehicle that may have a 30% gross margin, maybe 25%, you add the FSD package in the future, and suddenly the actual margin on that vehicle effectively could be 50 to 60%. This completely disrupts the traditional automotive model,
which is a really meaningful impact to the company's financials. And every time you buy one of their vehicles today, you have the option of upgrading. Right now, we're at about a 10%-ish globally, maybe a little bit lower than that in terms of adoption rates. We see that going up over time and having a huge impact. Second, what we alluded to in a recent note is the fact that many of the commodities that EV makers, including Tesla, use in their vehicles have come off the boil. They've come down in price. So Tesla was able to incredibly well skirt the impact of commodity price increases over the last 2 years after COVID. And these price reductions that they have in place will likely be less impact their gross margin based on those commodities coming down in price. So look, it's going to be a down year in terms of gross margins next year, we think, but we have these two things that can help blunt that impact.
George, is this the last year that Tesla doesn't have kind of mass market competitors in the EV landscape? And if so, with that 30% gross margin, how are you modeling for their growth when they do have a flood of new entrants into the EV landscape?
I'll take that, at least the first question. In terms of mass market competition, is this the last year Tesla doesn't have any? No. It'll be a few years before there's anything even comparable to what Tesla already has on the market today. Outside of China, there are no companies today producing EVs profitably. They're all losing money, and they're all losing money on a low volume of vehicles. Until they can make money on their low volume vehicles, there's no fucking chance they're going to be able to make money on mass market vehicles. And if you're producing a significant number of vehicles for the mass market and you're losing money on each one of them, the more vehicles you make and the more money you lose does not end well. These companies first need to nail their production, their manufacturing techniques, scale up and drive their costs down and start making some money on their low volume vehicles. We've seen Tesla walk the exact same path, although admittedly they started about 15 years earlier. First with the Roadster, then a revamp of the Roadster, then eventually the Model S, another low-volume, high-end vehicle. Tesla eventually becomes profitable on those. They introduced the Model X, another low-volume, high-end vehicle. Then and only then, more than a decade into the company's existence, do they reveal, not begin selling, just reveal the Model 3. Then Tesla begins ramping up production of the Model 3. They go through production hell, and eventually they come out the other end, somehow managing to survive, and finally starting to print insane amounts of money. Every other automotive manufacturer attempting to compete with Tesla in terms of a mass market electric vehicle need to follow the same path. If they do not, they will not survive. You can't start with a mass market vehicle when you haven't driven the cost of your technology down, when you haven't innovated in terms of manufacturing. There's a guaranteed path to accelerated bankruptcy. The best way to think about this, in my opinion, is to compare what other companies are producing, what's in their vehicle lineup, what are the price points of these vehicles, what's the performance, and how many additional steps are between where they are, and eventually releasing a mass market vehicle that they can produce and sell profitably. Tesla is almost an entire generation of vehicles ahead of the so-called competition. By the time companies like Ford, General Motors, Toyota, Volkswagen, etc., actually Toyota's not even going to happen, by the time any large legacy automotive manufacturer have their Model 3, their Model Y moment, where they have a high-end but not completely high-end vehicle, the could sell a few 100,000 units per year. Tesla will be dropping their next generation vehicle for around $25,000. Game f***ing over. I don't think people really get this. They just assume, oh, well, all these other companies will just start ramping up their production and then Tesla's finally going to have competition, right? Like they've been saying for the last decade and a half. It doesn't work that way. Tesla is an entire generation ahead of everyone. Years, literal years ahead. And they're not standing still. In fact, they're moving further into the lead, further ahead. Their lead is accelerating. There will eventually be some mass market electric vehicles, most of them probably coming out of China. But it's so important to understand that even if a company produces an electric vehicle that consumers can buy, and consumers do buy that vehicle, if they're not making money on it, and they won't be if they haven't driven their costs down starting at the high end, improved their technology, learned over years and years and years of producing EVs at scale. If they haven't done that, it doesn't matter if consumers are buying their vehicles. What matters is this company actually making money on them? And if not, they're not competing with Tesla on a mass market vehicle because the more vehicles they sell for a loss, the quicker they go out of business.
That's a really great question. And the way we look at it is like, look, I'll kind of take us back to the Apple days when they first launched the iPhone. And really it was a smartphone market of one. There was the iPhone and not really anything else at the time because they kind of broke new ground with their offering. Today, Tesla had the same impact, right? They're really the only EV in the marketplace. I know there are other competitors, but as new competitors flood the marketplace, which is what you alluded to, that market will grow. So, right now the EV market's about 10% of global auto sales. We think that'll get to 100, over a period of 10 to 20 years. And so Tesla can't do that alone. There are other companies that have to fill that void. And as long as they can continue their growth, which we think will happen over the next several years, including next decade, then that's fine. We need other companies to help to push the market forward. And frankly, Tesla has an advantage in this sense. They're vertically integrated. I mean, they do everything from processing materials, including, in the future, lithium, all the way to making autonomous software. There are very few companies in the market that can do both and that will do both over time. We think that's margin accretive to Tesla.
George, I want to go back to the self-driving upgrades that are potential and that potential margin opportunity. I mean, the company is under investigation related to its self-driving.
What did Mum tell me? If you don't have anything nice to say, don't say anything at all. Okay, well, I have nothing to say regarding these comments.
Isn't there going to be pressure? Aren't there going to be headwinds for people signing up for that when there's been some bad press surrounding both how safe it is and how much it's actually, real self-driving, et cetera, et cetera?
It's a great question. And look, right now, that level of skepticism we think is reflected in the adoption rate. We're about, like I said, high single digits, low double digits in terms of adoption globally of the product. We're fans of it. I understand they're under investigation for some of the claims that they made several years ago. We'll see how that ends up. And frankly, Tesla's been under investigation, as has Elon Musk, over many, many years, and that really hasn't impacted their growth.
Absolutely correct. Not only has it not slowed Tesla's growth, but the entire time it's been a bunch of noise. Investigation does not mean guilty of doing anything wrong. It means investigation. Practically every company on Earth, once they get a certain scale, once they reach a certain size, will be constantly hit with lawsuits, investigations, allegations, constantly. If the company continues to execute and do the right thing, none of this matters. It is completely irrelevant, won't slow them down. It's just a sideshow and a distraction.
We think it's a phenomenal product. And, 10, 20 years from now, 5 years from now, I think people will be thinking back about the days when people actually drove their own cars as an unsafe period of time, because the safety rates ultimately of this technology over the long term are much higher than human driving.
Man, it is so nice to hear somebody talking Tesla who actually knows what the hell they're talking about. Exactly. I mean, there'll come a point in the future where it'll be illegal for humans to drive vehicles on public roads. Probably going to be a while. But at some point, the pendulum swings. People understand that autonomous vehicles, and by the way, they're not there yet, but soon autonomous vehicles will be as safe as a typical average human driver. But they're not going to stop there. They'll continue to get safer. And at some point, consumers will realize it is significantly safer to be an autonomous vehicle driven by a computer that doesn't see a 10 and go, damn, I'd love this, and then crash. That doesn't get road rage. They can see in every direction simultaneously. They can think and act a lot faster than a human being. There'll be a lot of teething pains, issues, drama. Just you wait for the first fatal accident in an autonomous vehicle. Sorry, the first autonomous Tesla. But a few years into the future, beyond that point, consumers will widely recognize that it's much safer to be in an autonomous vehicle, at least one that's demonstrably safer than human drivers. And the pendulum will swing. People will no longer feel comfortable driving themselves. They would prefer the robotaxi, the AI to be driving them, because it will be demonstrably safer. Between now and then, it's going to be a bumpy ride, pun intended. But once again, some facts are being spat. And I still stand by my prediction, unchanged in my Tesla valuation model since day one. By the way, if you don't have access, supporters at the investor level and above on Patreon can access the valuation model. I still have the first robotaxi fair occurring somewhere on planet Earth in 2024, obviously, in the later part of the year. Now, I don't have any fucking idea when this is actually going to happen, but it's my best educated guess. And I'm quite confident. I'll be surprised if I'm off by more than about 12 months. Let's leave it at that.
George, I'm starting to see this a lot pop up more on Tesla blogs, noting that the design of Tesla's car, or at least in the exterior, are beginning to look sleepy relative to new models compared to what we're starting to see out of Ford and at General Motors. And I think they're right. I mean, these cars generally look the same as they have the past 5, 6, 7 years. Do you think they need a major product refresh?
When it comes to Teslas, it's what's on the inside that counts. No, really. These aren't the typical vehicles people purchase to compensate for their micro penis. Now, I personally think Tesla vehicles, the product lineup actually looks great today. That being said, the original version of the Model S, with that pseudo grille that didn't need to be there, honestly looks like horse shit today. Hasn't aged well, in my opinion. The amount of weight that many people put on the appearance of Tesla vehicles, oh well, they're kind of similar to what they looked like a long time ago, that's a problem, is a head scratcher. It's literally what's under the hood that counts. The performance, the features, the functionality, the value they represent to consumers, the software, the infotainment, the entertainment, the upgradability. Once again, I make the example of the iPhone. The design of the Apple iPhone has barely fucking changed in the last 15 years. The only thing that's really changed is the number of cameras on the back. These things incrementally improve year after year. But consumers continue to buy the Apple iPhone due to the continuous hardware and software upgrades, despite the fact that it still looks the same as it did 15 years ago. Now, obviously, there are exceptions to the rule. Some consumers really do care about aesthetics. This is why the Porsche Taycan sold lots of units, and by lots I mean a few tens of thousands, even though it had about half the range of comparable Model S and was significantly more expensive. Many people buying a Porsche actually are compensating for a micro penis. This is not true of Tesla.
Well, the Cybertruck is coming in the second half of this year, and that looks a lot different than anything I've ever seen on the road, maybe except for some, futuristic movies that we've seen in the past. But look, I think you have a point. Some of the models from an exterior perspective need maybe some slight tweaks. I happen to really like the Model X myself. I happen to like the Cybertruck. And I think I've mentioned it here in the past where, I would have bought one when it comes out next year, except my wife told me that that's not going to happen.
Gentlemen, listen closely. If you didn't just vomit in your mouth hearing that, you're doomed. This guy's going to get a divorce in a few years' time, and it'll be his wife who initiates one because she doesn't respect him because he's a fucking doormat. Can you imagine? You want to get a Cybertruck, and your wife shoots down the idea and you go, okay, honey, whatever makes you happy, happy wife, happy life. Fucking hell, dude. This guy gets Tesla, but he does not understand women. And I can't believe he said this out loud. Fucking disgusting. My wife wouldn't let me, my wife shot that. That's disgusting. It is not possible for a woman to be attracted to a man she does not respect. And there is no way this guy's wife respects him. If he says, let's get a Cybertruck, and she says no, and he goes, okay. Sorry, dude. My condolences. P.S. You might want to read How to Be a 3% Man before it's too late, brother. Moving on.
So, look, I happen to be a big fan of their design. They'll likely be tweaking that lineup incrementally. They don't really do dramatic product refreshes. They do incremental change. And so you'll likely see some incremental change to the 3, to the Y, to the X, to the S. And then you have the Cybertruck, which is obviously a game changer. And then they actually have a lower price model coming out over the next several years. We'll see what that looks like. We'll see if it's completely redesigned to only be an autonomous vehicle. But there's more coming up. And we do, to your point, we do expect slight tweaks to the current lineup.
All right, we'll leave it there. Big week ahead for Tesla. Canaccord Genuity Managing Director George Giannarakis. Good to see you. Talk to you soon.
Joining us to talk about Tesla's big week is Tim Higgins, Wall Street Journal reporter and a CNBC contributor. Good morning to you. What do you think we should be expecting, Tim? And as you've been talking to all of the sort of investor community and those around Tesla, what are you hearing?
Well, it's probably a record. I mean, a record profit for the quarter. But really, what analysts and investors are going to be looking for is that kind of excitement for the rest of the year. Can the company do 50% sales growth as it's been talking about in the past? Now, it missed that target last year, and that was a big hit to the stock, a big hit to the kind of the reputation of the company. So going into this week, it's really all about the future. Can Tesla get back to that growth stock story that it has fueled that excitement for so many years?
How much of the fall off in terms of where the stock is do you think is a function of the macro, which is to say, obviously, the multiple on tech stocks across the board has come down? How much of it actually is the growth story at Tesla? And how much of it is, do you think, the anxiety or nervousness? I don't know if you just think it's headlines about it, about Elon Musk's attention on Twitter, if you believe that that's taking away from his attention on Tesla?
It seems to be a mixture of all three. Clearly, the company didn't perform as promised, and that's an issue. You got the macro issues that we've talked about, but it also comes down to Elon seems to be distracted, and perception is reality, and that kind of reality for Elon at this moment is that a lot of investors have this perception that he's maybe his hands are not on the wheel, and then he's been distracted with Twitter in the last 3 months. So one of the things investors are looking for this week and the weeks to come is this idea that he's re-engaged at Tesla, and that that the company can be prepared for the possibility of recession this year.
And I think the question, though, is, given your own reporting, is that the case? Meaning, is he focused more on Twitter these days? And even if he is focused on Twitter, one of the things that's so interesting is he's had a same management team at Tesla. I mean, there has obviously been turnover over the years, but the current team is the same team. And you look over at SpaceX, Gwynne Shotwell's been managing that business. So how much is the investor community supposed to take away from his personal involvement or personal attention on one specific company at a time?
Well, you hit it. It's very hard to understand exactly how he prioritizes things in his mind. I mean, the average person couldn't handle running 3 companies. He's not the average person, right? So, to kind of the idea of what, his engagement level is tough. He would say, and he has said, that he's still engaged in Tesla, and that, the signals are that the Twitter is going to be almost kind of a hobby for him. But still, investors out there are concerned, and they've been airing those concerns in a rather remarkable way over the last few weeks, asking him to get back into the seat at Tesla, to put Twitter in the hands of another CEO.
It's been super amusing to watch Tesla stock surge over 20% in the last couple of weeks, despite Elon Musk having made 0 changes to Twitter. There's no CEO working at Twitter. He hasn't replaced himself. He's still tweeting. He's still causing butthurt. He's still chiming in on very hot topics. But miraculously, Tesla stock has moved over 20%. It was Elon's fault Tesla went down, right? But it's not his fault that it went up. Makes sense. Now, in fairness, there certainly has been a perception among some investors that Elon is distracted, but it's actually pretty easy to tell whether or not Elon's distracted. Results. Is Tesla still selling all their production? Yes. Are they still dominating? Yes. Are they still making progress and updates with FSD? Yes. Are Austin and Berlin continuing to ramp? Yes. Is SpaceX continuing to launch and recover boosters? Yes. You get the f***ing point, right? Perception is one thing, reality is another. It's true that most people couldn't handle even 1/4 of what Elon has on his plate. But Elon ain't most people. In fact, I don't think he's a human in the first place. I think he's an alien. In fact, I think we may share the same home planet.
Joellen, what about you? In the case of this price cut for Tesla in particular, what do you expect the cascading effect to be across the rest of the industry? Are they going to the historical precedent here, are they going to elbow competitors out?
I think that's the likeliest scenario, at least for right now. I mean, Tesla definitely has the best position relative to supply chain and to getting cars out on the market. And although, the EV market is growing dramatically and the number of players involved is growing by leaps and bounds, Tesla still has the ability to deliver more goods to the market right now. So I think that they can really take a big bite out of the market, which is growing and will continue to grow for the foreseeable future.
And the cost of that is near-term profit margins, Joellen, right? So, maybe give us a feel for what would success look like. Is it going to start off by looking like failure?
I don't know that it will, to be honest. The profit margins at Tesla are still very strong. And to be fair, if Elon Musk wanted to rebate everybody $10,000 out of his own pocket, he could do that pretty handily. So I don't see a huge cut to Tesla's long-term profitability. There might be a short-term bump or drop, rather, but it's not going to be a organizationally threatening event.
Phil, how much pressure is Tesla under to boost deliveries?
They're under a fair amount of pressure from the standpoint of, look, they've got 4 gigafactories worldwide. They've got 2 here in the U.S., 1 in China. The biggest is in China. And then they've got 1 in Europe. So you've got these factories that are in place with a manufacturing capacity of somewhere around 2 to 2.2 million vehicles. So you don't want to, if you have that capacity and you can use that capacity, you want to use it. And if you're Tesla right now, you have the hammer, Tyler. You have the best-selling electric vehicle in the world with the Model Y, and it's in a sweet spot in terms of pricing relative to other vehicles. So if you are Tesla and you can afford to take a bit of a hit on your automotive gross margins, which were, 26.8% last quarter, all right, so you drop them down to 22 or 21%. You know what? That's still more than double than the profit margins from all the established automakers.
It is so refreshing to hear facts being spat on CNBC about Tesla. Feels right. Even after Tesla's price cuts, they're still going to be making significantly more money per vehicle sold than anyone else in the automotive industry. And the big caveat there is everyone else in the automotive industry who's making a third or half of Tesla's current profits is making those profits on dinosaurs, ICE vehicles, soon to be extinct. Every time Tesla takes their sledgehammer to pricing and reduces the cost of their vehicles incrementally, they completely fuck the so-called competition even harder. These companies are already losing money on all their vehicles sold. They can't afford to keep competing with Tesla on price, but Tesla can afford to keep reducing prices as not only materials, parts, and overall production costs fall, but as their production scales and they benefit more from economies of scale, they can pass these savings on to consumers, assuming it won't blow out their wait times to super unreasonable times. Tesla's playing whack-a-mole with a fucking sledgehammer. Great to hear Phil LeBeau spitting some facts.
So that's why if you're Tesla, the cutting of prices makes sense. You can afford to take a bit of a hit on profit margins, but you can grow deliveries potentially.
And Mike, are you looking to the stocks of the other EV automakers kind of for signs here of which way this one is going to break in terms of opening up more of the market to Tesla or shooting themselves in the foot?
Certainly looking at them. I actually even think the legacy car makers are worth looking at, too, because a lot of the embedded growth expectations for GM and Ford and the Europeans and everybody else is based on how much of the EV market they can capture. So I think it's all connected. One of the issues with reacting to Tesla's pricing moves is that if it seemed as if it were this grand strategy and they had sat there in a disciplined way and said, this is what we're going to do as a power move to gain market share, it might have been taken a little bit better. And if expectations for earnings weren't already so high, then maybe the market could have absorbed it. But it seems as if it came right along with the typical end of quarter scramble at Tesla to try to deliver as many cars to meet targets, and it's happening at a time when they were shut down in China for a little while. So it just has this sense of a disorderly, slightly panicky reaction to, and by the way, earnings estimates for 23 and 2024 are down 20% at Tesla in the last 3 months. So whatever the long-term impact, the short-term impact is, the stock looks more expensive than it did in September, even if it were at today's price.
Joe Allen, how vulnerable, let me put it that way, is Tesla to Elon Musk's popularity or lack of same?
I think it's really too soon to tell, particularly because the kind of base Tesla buyer leans Republican. So
I'd love to know where this so-called information came from. Let me know in the comments below. If you own a Tesla and you're in the US, in the last US presidential election, did you vote Republican, Democrat, or other? And as it stands today, in the next presidential election, which way will you vote? Republican or Democrat? Only respond if you already own a Tesla and you're in the US. I'm very curious to know. First time I've heard anyone say this. Now don't get me wrong, much of the left-leaning media is insinuating that anyone that agrees with anything that Elon says is far right-wing, Nazi, MAGA, whatever the fuck, right? That's the tactic. Anything right of the far left is extreme right, because that's how it works. I would be surprised if there's really much of a political persuasion either way with Tesla vehicles. In the early days, I would have been willing to bet more Democrats were buying Tesla vehicles overall. Maybe this is skewed a little bit more towards people in the center. But I tell you what, extraordinary claims require extraordinary evidence. I'd love to know where she heard this.
The fanboy base of Tesla is the same as the fanboy base for Elon Musk. The range of EVs available for people who don't like Musk is still pretty large. The price might be high, but I don't know. It's I think it's too soon to tell. There's always a risk of CEO personality and CEO behavior leading organizational behavior. The organizational reputation seems to follow CEO reputation pretty robustly in the organizational research. So it could happen. I think the likelihood in this scenario is relatively low.
Lower than low, I'll say it's effectively zero. I think the only people who make a buying decision, I don't like Elon, therefore I'm going to buy X, Y, or Z EV instead, are people who are desperate for the approval of others. They're so pathetic, they're so insecure, they have so little self-confidence and belief in themselves, they don't value themselves at all. They will do anything to gain the perceived approval of fellow humans. Therefore, if hating Elon's a current thing and Elon's bad, I'm going to tell the world that I'm not buying a Tesla, I'm going to buy this EV, just so people know what a good person I am, because I also hate Elon, because hating Elon is a current thing. These pathetic, self-hating, virtue-signaling losers are a tiny fraction of consumers globally. I can tell you for a fucking fact, there'll be practically zero people who opt not to buy a Tesla because they dislike Elon Musk, who don't announce it to the world. I just bought a new Ford Mustang Mach-E because Elon's a dick. They'll tweet about it. They'll make a video about it. They'll tell you about it. This can create the perception that a lot of consumers are thinking the same way. It's a false reality. Pathetic virtue signaling members of the hive mind who will hate somebody simply because the fake news told them that they should be hated are a vanishingly small minority of consumers. Don't be fooled by what you see. You know, I heard Steve Jobs was a bit of a How many people did that stop buying an iPhone? You know, I heard Henry Ford said some things about certain groups of people that weren't exactly, shall we say, kosher. I wonder how many people didn't buy a Ford because of that. And I suppose I shouldn't bring up who founded Volkswagen, right? Yeah, let's not even go there. And to bring the video full circle, going back to the question, has Tesla stock hit the bottom? Is this it? I don't fucking know. I hope not, but hope's not a strategy. The cheaper Tesla stock is, the better, because the better value I'm getting for every dollar I spend buying the stock. But I won't be surprised if this does turn out to have been the bottom. After all, there's only so long a stock can remain so thoroughly detached from reality. And as I've mentioned many times recently, because it's such an absurd fact, that Tesla stock on a forward PE basis was cheaper than Pepsi, Coke, and Chipotle as recently as a few weeks ago. Made absolutely no sense. Yet it happened. I said it wouldn't last. I said it didn't make sense, and I still stand by that statement. I've got no idea what's going to happen leading into and following Tesla earnings, but I can tell you I'm still buying with literally every spare cent. Head over to Patreon, my 2022 income reveal, exactly how much money I earned from all income sources in the full year in 2022, including YouTube, Patreon, merch sales, my secret OnlyFans account, and one or two other sources as well. If you're a financial voyeur, you want to know exactly how much I earned, see you over on Patreon. On PS, my income reveal video contains unequivocal proof that we absolutely do live in a simulation. If you're curious, head over to Patreon with the card in the corner or the link in the pinned comment. See you over there. Love ya.